Welcome. Welcome to my YouTube channel. Today, in Company Corner, I am going to discuss a blue chip company which has been a wealth multiplier manifold. But again, last 1 year, the prices has been under little pressure. It's a very important NBFC from the houses of Bajaj. Company name is Bajaj Finance. People who invested in 2015, so they have created enormous wealth in this company. Even today, the company could be very attractive, but the prices have been falling. So the question comes whether to remain invested, whether to take a new position in the company, or come out of the shares and invest elsewhere. So we'll do a deep dive into the company's fundamental and then bring to you my observation, my thoughts, what I shall be doing. And before I proceed, I like to reiterate here that investing in the stock market is risky. Therefore, before investing, please do consult your investment advisor or do your own research. Purpose of this video is purely educational. So let's start. So Bajaj Finance, the company market cap is 3,61,000 crore. So it's a really huge large cap company and it is trading at about 36.5 P. If you look at ROE, it is 17.5, which is very good for NBFC. Sales growth and profit growth both in 3 years and 5 years have been fantastic. They all are more than 15%. So this company really qualified for all the parameters which normally we consider for including in the portfolio. Now let us quickly look at the price pattern of this company. This company, as I mentioned to you, 2015 the price was around 300 and today it is about 5,900. It has touched a high of almost 7,800. So what you should be doing in this company at this point in time? Bajaj is very good management. The board is very good. The businesses are good. The company's control is very good. But there have been some pressure on the price. So the question comes, what you should be doing? So we'll go and do a deep analysis. When you look at the EPS plot from 15 to 22, you see EPS is going continuously out with some variations, but all days are not alike. So it won't go in a very straight line manner, but there will be variation and it is upward going. So in the case of sales also has been rising continuously and financing margin also have improved from 25% to close to 40%, 39% or so. So in terms of fundamentals, company appears at a very good stage in terms of moving forward. And when you look at the cash flow, since this is an NBFC, our criteria of free cash flow will not apply it here to that extent. And ratios ROE, return on equity. If you see, of late, during COVID period and current year, the ROE is little under pressure. But before that, it has been at the stage level of about 20-22%. When you do a peer comparison, I have considered Bajaj Finance, Bajaj Finance, they are the same group, Bajaj Holdings, Cholamandalam Finance and Shriram Finance. I think main comparison should be made between Bajaj Finance, Chola Investment and Finance and Shriram Finance. Now when you look at their price performance, this company used to be 80 times, 90 times P, now it is available at 36 P. And since it's leader in the market, difference between Chola and Bajaj Finance is not much, just about 1.4 times, 1.5 times. When you look at the ROE is almost second position in ROE. Chola is number 1. NPM, sales growth in 5 years, sales profit growth in 5 years, sales growth in 3 years. All these parameters, the company is high. The company is a very large franchise. And it does a lot of analytics work to really find out the credit worthiness of credit people who take loan from the company. They go to professionals and all those. So that is one of the reasons the NPA for this company is very low. It is in the range of about 0.45, 0.5%. Being NBFC and such a massive scale, that is really credit worthy in my opinion. So it's an industrial leader, reasonable valuation at this stage, because when you go back to the PE, I will show you PE has gone up to almost 90 at some point in time. And today it is available at 36.48. So relatively it is much attractive compared to the way it used to be earlier. When you look at the EPS growth, I am just trying to act here as a contrarian. So let us say even 36 is very high. What happens if eventually P correction takes place and P becomes 25? So I did some sort of calculation. When you look at the EPS growth from the EPS chart, it is about 25%, 24.794%. EPS growth is there for this particular company. And EPS after 10 years, if you take this growth rate, then EPS after 10 years is projected to be about 1500 rupees. And even though let's assume that P becomes 20, then this share will command a price of 30,000 rupees plus. And from that perspective, if you are investing today at 5,900, you will have a CAGR, rate of return. This is CAGR rate of return basically of hopping 17.66%. Mind it, this is assuming PE of 20, whereas PE of this company is 36, and this company is the leader in this segment. So no point in time it will be less than 25, which is the PE commanded by Chola. So from that perspective, this will give you a much better return, or it will give you a CAGR of more than 20% as per this calculation. But friends, calculation is calculation. Sometimes assumptions we take, the calculations we do go for a toss. But there is a very high probability that this company will do very well in years to come. Now let us look at some more parameter and dive deep into the attractiveness of this share. So as you know here, for finding attractiveness, we normally look at P, and as I mentioned to you, the P ratio of this company, when you look at, the highest P had gone to 106 sometime in 21, and today it is trading at about 36. In fact, median P for 5 years is around 50. So much discount over 5 years, and similarly even 3 years P is very low compared to median, 1 year is very low compared to median. When you look at price book, which is a parameter normally used for financial companies, even there the PB is quite lower than the median for 5 years, 3 years and 1 year also. So friends, the 6 criteria, layman criteria, which normally I recommend for all of us to look at, this company appears very, very attractive for buying at this stage. Now the question comes, if it is so attractive, why people are not buying? So we'll look at some more parameters. We'll look at some discussions by certain brokerage houses and also FIs and DIs, and then see how they are doing, and then we'll take a call about this company. So for doing that, let us go forward and look at all this data. So as I mentioned earlier, all these parameters is low. So top it has achieved 7862, today is 5900, so it is almost 25% discount to the all-time high which happened a couple of months back. Now when you look at the recommendations, all the brokerage houses 2 months back, they are all buy on the shares, and they were recommending a price target of 8,000 plus. Now when you look at the FIA and DIA holding, it's a very interesting pattern comes here. You know, recently lot of FIs were selling shares in Indian stock market, and particularly in those companies which were highly valued like HDFC Bank, this company and Kotak, etc., and quite a few other companies. So if you look at September onwards, there have been a decline in DIA holding from 23% to 17%. In the same time, the holdings of DII, FIA has reduced, but DII has improved from 9 or 10% to 15%. So if you add up these two, this means FIA and DII, they are sort of constant over this period of time. So friends, in that case, what you should do? Recently, the reason for beating the price is that AUM, the company was expected to grow. The growth rate was little lower than the expectation of the market. That was one of the reason some of the foreign companies started thinking that growth is retarding in the sector, and that's why there could be difficulties. never forget, this is a very unique company. This is a huge data management company apart from being an NBFC, because the way they manage their portfolio is basically on data management principles or data science principles. Also, this company is converting itself to a fintech type of company in front. So it will be backed up with a solid background and fintech in the front. So they expect by year end of 2023, that to March 23, their all front end shall be ready for online loan giving and evaluation, etc. A very large extent, they have done that already. They have been reporting those progresses in their quarterly reports, etc. So that is one thing which we need to keep in mind. So when you look at from all these parameters, very strong management and management practices, highest ever franchise in 22. So their franchisee has even grown. AUM growth rate is lower than expectation by the market, and good outlook for long term. Company believes that it has a very good outlook for long term. Since the company management is so confident and the AUM growth retardation, I personally think that it could be a momentarily stuff, because that keeps on coming in every company. Company could be very professional, company could be well managed, but there are some bumps do come in the journey for each and every company. And I think I personally consider this particular retarding from that perspective. So therefore, friends, this company is a very nice company, available at 5,900, and I keep on buying little stock in this company. I hold more shares in this company from previous time, but even now I am adding it. So what I would suggest is, even for those who are holding it, this is not a time to exit. You should hold the company. If you have money, you can go on adding at this each fall, and be patient. As I showed you the calculation, if I've shown you 20-25% CAGR, even though it doesn't come 20%, it will come 15%, and that is not bad. Even today, with all interest rate increase, the bank rate is just 7, and it is going to give you at least double of that, friends. So to me, it appears very attractive. Do your own research before you take a decision, or consult your advisor. I hope you like this deliberation. Thank you so much for your time, and see you next time.